Look, you've got $1 billion dedicated to what is your 22nd early stage fund. You then got $2.5 billion going in the growth areas. Just tell us about what excites you. Why this amount of money? Why now?
Well, we're really at the early innings of probably the biggest transformation in technology that any of us have witnessed. We see companies growing at big scale faster than ever before. We see AI penetrate all facets of our lives, whether it's on the consumer side with search, media. We have video models that are still on the come. And then on the work side, we see companies fully transform how they operate, whether it's across legal and professional services with Harvey, healthcare with open evidence, transportation and autonomy with Waymo. And we're still very much in the early innings of all of this. If we look at how some of the leading AI-forward companies operate, and we compare that to the more traditional companies, the opportunity to penetrate the enterprise with AI is just infinite from where we sit, and that's reflected in the funds.
Where excites you the most? Is it putting the money into fresh new startups that haven't even been designed now? Or is it backing, say, a star performer? Anthropic, we know, is looking to be IPOing. You've got standout names like SpaceX on the books as well. But where are you thinking about where you can follow on your capital?
So our model is pretty simple. We try to back companies as early as possible out of our venture funds, and as they hit inflection, as they hit escape velocity, to really concentrate and double down with our growth funds. Sometimes we see things a little bit later, and so we come in with a very high conviction, big check out of our growth funds straight away. But the really exciting thing we're seeing in the market today is that as companies hit really large scale, like in the case of Anthropic, that we've really never seen before, the opportunity to back these as they progress to escape velocity is near infinite. And so that really is reflected in the fund structure. So the venture fund, we're looking for application layer companies, we're looking for infrastructure companies, we're looking for autonomy, and as models become cheaper and more performant, the physical economy becomes an opportunity. But as these companies then hit scale, hit growth, we really concentrate with our growth funds.
Ilya, we see extremes at both ends of the spectrum. Wrote a few weeks ago about the seed round now being more like the coconut round, the avocado seed round, where you are putting huge checks into a collective of a few individuals, and you're basically betting on their intellectual power. What are you seeing in that early stage? I'm really interested. You've dedicated those funds to that part of the market.
Well, what we're really seeing is just the opportunity, again, to transform industries with AI business models is, again, near infinite. I mean, everything is really up for grabs. We're kind of past the what I would call the hype buying part of the cycle, where folks just wanted AI. And we've seen companies like Harvey, for example, in market with customers with data around engagement and growth and performance to inform how we should think about these opportunities at the early stage. There is a novel case of structure of companies where you have sort of the formation of next generation labs, which could be the next inflection in AI itself. And those are very interesting. But then you have really runaway successes that are helping people do their work better, that are helping consumers get answers around healthcare. And so we try to balance our investing across all of those because there is another frontier to be unlocked here. And those are the model companies of the future. But then you have the model companies of today, like Anthropic, which are growing faster at a scale that's never been seen before. And I think that's still early in their trajectory.
At the other end of the spectrum, Bloomberg also reporting today that SpaceX could seek to raise $75 billion in an IPO, confidential filing this week, targeting June. The valuation, $1.75 trillion to $2 trillion. Kleiner Perkins has participated in some prior SpaceX rounds. What's going to happen? How is that going to impact the world? Space is a domain that you want to go after in the new funds that you've raised.
I think we want to go after many domains. Space is a really good example of bringing communication to the world, and that's incredible connectivity that lifts everything if you think about technology, right? The internet was the big unlock, and getting more of connectivity throughout the world is important. But it's also a testament to the fact that you now can build companies that are truly transformational when it comes to both the physical world and the digital world. And that's something that we will focus on quite a bit. And that's autonomy. That's autonomy maybe in the defense tech sector. That's also autonomy on the consumer side. We have a position in Waymo as well. And so we just see a really, really large scale opportunity across everything.
Ilya, according to people familiar, I'm told that you managed to raise this amount of money pretty fast, and it was oversubscribed. And I imagine LPs were excited because of the opportunity and the delivery of liquidity, unlike a lot of other funds, like you've delivered when it comes to the Figma IPO. We saw the Windsurf acquisition. We might see enormous returns if SpaceX and indeed Anthropic and maybe even a Databricks or a Waymo do go public. Is that what locked in the LP base? How do you think about the need for the markets to open in 2026?
We're very fortunate to have an incredibly supportive LP base, and we're very thankful for that. And ultimately, it's all a testament to the entrepreneurs that we back, because they're the ones building these incredible companies. But if you look at the public markets and if you look at what's really driving value, it's technology companies. And if you look at the private markets, there's a public market Mag 7, and there's probably a future private market Mag 7 that's on the come. And that's really the interest that we're seeing from limited partners, because these companies are getting to, again, revenue scales that we've never seen before, faster, and compounding at those scales faster than ever before. And there's probably a next level of the future Mag 7, and these could be the application companies like a Harvey, like an Open Evidence, which are then going to be the next generation. It's really just a testament to the fact that tech is driving pretty much most of the value you see today. LPs recognize that, and we recognize that, and we think that's the really big opportunity here.
Ilya, we've talked about this, but public market sentiment might be at an all-time high for tech. Public sentiment is not. Certainly when it comes to AI. They're fearful, they're worried about jobs, they're worried about energy prices. And from your portfolio companies, are you trying to get across that the opportunity here? You talk about the infinite possibilities, but for many listening at home, it feels like infinite worries and concerns.
Well, I think one byproduct, which will be pretty straightforward, is quality of life will improve for everyone, right? We will have better access to information, better access to healthcare, better access to services, better, more performant world around us, really. If you think about Waymo, the ability to have very safe transportation on demand is incredible. On the flip side, there is a very clear worry, because these changes are happening on a time scale that's faster than ever before. And one of the things we do think about quite a bit is, how do we help folks upskill? How do we help folks learn and transition into this world? It's going to be a world of abundance, but what we have to be thoughtful of, as I think the industry, is making sure that the abundance is accessible and distributed.